All right, well, hey there, guys. This is Kevin. This is going to be a video showing you a couple of different things. I want to share with you, how to use a Thinkorswim platform to scan for potential option candidates, how to scan for trades, and how to just get a little bit more proficient if you don't really have a core set of underlying vehicles yet. But then B, I also just want to talk again about some trade management, why I am so emphatic and emphasize so much about keeping your position sizes small, not only when you're learning, but as you get a little bit more skilled and get a little more confidence and get a little bit more experience. That does not translate and say that it's okay to just go ahead and quadruple or throw on 10 times the size because you've had a few months that have been successful. Quite the contrary, actually. The smaller you can keep your trades and the less stressful they are to you, the more trades that you can effectively put on that have the higher likelihood of succeeding. Okay, so this probably should only be about maybe 5 or 10 minutes long, but that's kind of what I want to post here. I apologize I was not able to put up a weekly webinar this week. It's just schedule has been so hectic, so many things going on, just in preparation for not only the new site but just life stuff and current working. It's been pretty hectic the last few weeks. So anyway, appreciate you guys' patience. But if you have, let's just say I want to use the hypothetical $10,000 account, because I think that's what I really want new traders to kind of identify and focus on starting with, whether that's in demo or real money. That's what I want you guys to be starting with. If I'll say it before, I'll say it again, if you can't trade $10,000 effectively and successfully, you really have no business even considering trying to ramp it up and trade more. So let's just say you have the hypothetical $10,000 account. That's what you're going to trade. Would you rather trade 2 or 3 trades in that $10,000 account that may need to be a little bit larger, or trade maybe 20 or 30? Now, common sense will tell you, well, of course I only want to trade a couple because then my commission load is going to be less, and I don't have to watch as much, and on and on and on. But I want to challenge that opinion just for a second and have you really consider the smaller you can keep your trades, the less likelihood any one of them is going to really stress you out, as well as the probabilities and the math and the statistical edges working in your favor, that if you had 20 trades on, odds are very unlikely that all 20 of them are going to go against you at this same point in time. Especially if we are building trades and scaling into trades that we are accumulating option spreads over a period of days or weeks or even months, right? If we're keeping our position size small, any little movement against us really doesn't affect us. It really doesn't bother us. Now, if we have a $4,000 trade on and we put 40% of our capital at use on one trade and that thing moves against us, that's going to cause some stress. That's going to cause some anxiety. That's going to cause some pain. That's going to cause a little bit of, maybe premature adjusting. It's going to cause a lot of issues that I think that you really just can avoid by keeping small, 1 and 2 contracts at a time. So let me just go ahead and come over here. I want to show you, this is the Thinkorswim platform. You've got multiple tabs across the top here. We're going to go to scan, and you'll notice when you hover across them, it will tell you what's in each tab, right? I haven't clicked anything, I'm just hovering, and it'll tell you. So scan will have these 4 components: Stock Hacker, Option Hacker, Spread Hacker, Spreadbook, and ISE Spreadbook. We are going to stay just in Stock Hacker. And the reason for that is I want to look at stocks, and I'm going to add a separate filter on there, stocks that only have options on them. If you come into Option Hacker, you're unable to do that. So we're just going to stay in Stock Hacker for now. Now, if I come right here, I'm going to reset. That will reset the page to system default. You'll see, yes, it does. So now that tells me right now the default system model is this. It's going to look at net change of stocks, all volume, all percent change. And you know, that gives me, if I just hit scan right now, that's going to tell me I've got about 13,000 candidates of stocks that I can trade. Now, if the very first thing I want to do is I want to intersect here, category, all optionable. Now, if I hit that and hit scan, what you'll notice is right off the bat, that has eliminated my pool from 13,000 to 3,000. So right off the bat, by adding this extra filter, I have eliminated over 10,000 stocks that just don't have, you can't trade options on them. All right, so why do I want to waste my time looking at them? So reset, start back at the beginning. I want to get rid of all of these, and I'll tell you why. I want to start with a blank slate. All right, I hit scan. I've got 13,298 stocks that I can select from. So I intersect it, category, all optionable, hit scan. Now I've got 3,700, all right? And I can already see this is gonna be longer than 5 or 7 minutes. I'm sorry, guys. I hope you don't mind. But so now what we're gonna do is we're gonna add a filter for stock, and I want to look at volume. I want volume to be high, all right? So we're just gonna come up here and we're gonna say I want volume to be, 10,000 right here. Now scan. I went from 3719 to 3366. Excellent. So now what I've already done is I've already begun eliminating and narrowing down my pool of stocks to choose from. All right. I want to add another filter for stock. And then what I want to do is I want to say, all right, if I'm looking at all these choices that I have here, right, these are all the choices that I can see, all right, well, I also want to look at right here, I want to look at the mark. And what that's going to let me see is that's going to tell me all stocks that are trading from 0 all the way up here to, what's the highest one? $1,444 per share. All right. So I don't want to really be trading penny stocks when I'm trading options. So I'm going to come up here and I'm going to say maybe I only want to look at stocks that are between $25 and the max. I hit scan, so now I've already dropped me down to 1,636 candidates. All right, and so then once I have that, now if I come in here and if I go ahead and add a filter for options, I want to look here and I want to say implied volatility. Where are we at here? All right, implied volatility. Again, we are looking for stocks that have a higher implied volatility. Coming to charts, I want to be selling options when the implied volatility is high. This is the SPX. Implied volatility is relatively low. We want to be selling it when it's high. All right, so I want to add that implied volatility. Let's just say I want it to be, minimum 20, and max would go all the way up to 100. So now I'm going to go from 1636 down to probably, well, all right. Does that mean, hang on a second. Maybe this is let me pause the video. Hold on. Okay, sorry about that. I just had to locate what I was looking for. So let's get rid of that. All right, so we're at 1638. I'm going to add a filter for options. I'm going to go implied volatility. We're going to come up here to, we'll say 50%. All right. I'm going to hit scan. It's going to keep us probably right around the same. And then I'm going to add one more, and I'm going to go open interest. I want stocks that only trade options that have a higher than 50% implied volatility. Vol index. Nope, you are not able to select that. And that have greater than 1,000 contracts of open interest. All right, I want highly liquid stocks that will give me the ETFs, that will give me underlyings that are heavily traded, that will give narrow spreads, and I can get in and out of that have high vol. All right, so I'll hit scan here. It's going to give me probably 500 or 600, 498. You'll see this little cog wheel right here. I want to click that, and I want to hit customize. This is what it comes over. I want to look at the IV percentile. All right, and the reason for that, and I'll tell you why, is because now if I click this column, if I click this column over here, it alphabetizes them. All right, if I click this one, it tells me, you know, by last. Again, everything that is above $25 a share, that has more than 10,000 shares of stock traded, that has a higher than 50% implied volatility, that has more than 1,000 contracts of open interest traded, will be in these in this scan. Now if I click this and say IV percentile, you'll see that it gives me from lowest to highest or highest to lowest. So right off the bat, now that is going to tell me these candidates that have the high IV percentile, that has this vol index, it will automatically give you. It tells me what the earnings per share are, the high, the low, the bid, the ask, the volume, percent change. So I can just begin to start going down, all right? ACAD, I have no idea what that company even is, but what I can do is I can say, all right, well now I'm going to save this watch list, and I can give it a name, I can save it, or I can just begin going down here and I can say, all right, this is a daily chart. We'll just do a 1 year daily chart. 200-day moving average that has IV rank levels, and I can just say, all right, let's just go ACAD. Let's see, does that appeal to me? Well, I don't know, maybe. I mean, it's got high implied volatility. Earnings have just come out. It's, you know, it boxes and ranges pretty well. It had a pretty explosive move going into earnings, and now it's come back down, but why would I not consider selling some options that maybe at 45 or maybe 42.50 and 30? Well, then I can begin to say, all right, let's link this. Let's link yellow to yellow. All right, it'll bring, let's get rid of all these trades in here, sorry. So it's going to say ACAD. It's Acadia Pharmaceuticals. All right, there you go. Well, that tells you, you know, why it might be a little bit more volatile. Maybe they're having drug trials or something going on. Well, now let's go. All right, well, let's go ACAD. Let's see what options are available to us. If I want 42 days to expiration, well, you know what? This has pretty wide bid-ask spreads. It has open interest. It has good, you know, contracts traded, but you know, these are not necessarily penny-wide spreads, and if I get filled and I give up a lot of slippage, it's going to be hard for me to make money on this trade. But you can see, all right, well, what if I just wanted to come right here and say, what did I say? Let's go 42.50 or even 45. Well, let's say, well, what if I want to sell 45? I'll sell a vertical up here. I'll go down here to 30. I'll sell a vertical here. This will become my risk profile. Now I've got a trade that at max is going to cost me $66. The most I'm going to make will be $34. I'll begin adjusting wing widths or contract sizes to you know, come up to the amount that I am willing to deploy on this trade, but that's a valid, viable trade. Well, let's go back to the scan. Maybe I just don't want to do that one. It seems too small or too little credit. Again, I'll just go to the next one in the list. ALNY. What is that one? ALNY. All right. IVR is high. It's another pharmaceutical company. And you will notice that a lot of times these stocks that have the high implied volatility, they are a lot of the high-tech, biotech, you know, some of these companies that are going to move around a little bit more, be a little bit more unpredictable. So, you know, maybe we'll just want to stay in stocks that we're familiar with. What's this one? Isn't this Alcoa? No, Alcoa, it might be this one. I'm not sure, to be honest with you. I don't trade many stocks. I've got a handful basket of stocks that I enjoy, that I trade fairly regularly, but this is certainly something that I will be showing you guys how to scan and how to look for trades, so that I can teach you how to fish for yourself once you understand the mechanics and how we're selling options and why they work so well. And then this is one way to use the platform to your advantage. All right. Well, this is the first 50. Now, you know what? Let's do this. Let's just show all of them. All right. So if we're going to show all of them, that was only scanning the first 50. All right. So now what this is going to do, this is regardless of the first 50 or what the IV percentile was. Now you'll see, look, this is at 100, this is at 100, this is at 100, this is at 100. All right, so now if I scan down through here and I find some Fossil, there's a familiar name, right? 97.99 IV percentile. That looks like something that might interest me. Wow, that looks like, I mean, boy, really it's leading up into earnings, but what happened after the last earnings? It dropped, it gapped up, but it came right back into its range. What happened after the earnings before that? Dropped, began to box in range. So, you'll see, just because implied volatility is high leading up into earnings, that's that uncertainty. If we were trading this and we had a gap down, you can't recover that. So I like to watch these going into earnings, but look at what happens right after earnings. All of that premium deflates, I mean, almost immediately. So if you're going to make these trades, again, keep them small, and if you have a big giant move like that that goes against you, well, you know what your risk is, and you know how it's defined up front. So yeah, I mean, this one doesn't have a lot of open interest at the Decembers. We can come into the Novembers if we wanted to. We could go into the weeklies. I mean, again, there's all kinds of choices, but the bottom line is, if you know how to scan and if you know how to look for these candidates, then you can begin constructing trades that make sense. GMCR. Let's look at that one. Let's see here. Add to. I thought there was a way where I could link it right to the chart without having to type it every time. So again, we're coming up on some earnings. 11/18. All right, a conference call on the same day. So if I wanted to come into here, this is got a fairly wide spreads here. Maybe I want to look at something if I sold a vertical here, or again, I'm talking a lot about the butterflies. What if I just constructed analyzing, buying a butterfly, and look something like this? Maybe I want to give myself a little bit of room on the downside. Stock's at 51.70 right now. So if I construct this kind of a setup, it's going to cost me $218 in margin. I make $32 if it runs away to the upside forever and ever. I really don't get into trouble until about 42 at expiration, and that is, down in this area here. So if that looks like a valid trade, well, guess what? You can put that on. It's Vega negative. It's theta positive. It has a little bit of a bullish bias to it, and you'll take in about $32 of credit. If I create the duplicate order, that tells me it's a pretty wide spread. May or may not get filled at $32. So that may be something that I'm not interested in. But anyway, using this scan tab, you can experiment, and you can play around with all different features in here. If, let's say, I wanted to increase the implied volatility to 70%. All right, I want more than that. I want to get the higher ones, and I want higher open interest. I want 2,500 contracts open interest. I want to scan for that. Eventually, if you're drilling down to where I'm only wanting to look at a handful of the most liquid, highest implied volatility, stocks that are maybe trading 100,000 shares every day, and instead of $25, maybe I want stocks that are only over $100 a share. You can see I've immediately now narrowed this down to only 24 candidates that I have to scan through. That these are all going to be the big name stocks that we're going into. Amazon. Let's look at Amazon, and then I will absolutely wrap this up. Sorry, guys. I really did intend this to only be a few minutes long. Amazon. Here you go. Now, this you'll see has the IV. As you get down on a list, it drops off pretty substantially. So if we're down here at about 30.67 of an IV percentile, that may not meet our criteria for actually selling premium, but we're at all-time highs. We've already had earnings. Are we going to continue powering up, or do I really think that we can put on a small trade that we can scale into? If I say, all right, I really don't think that over the next 40 days it's going to continue powering higher, so let me come up here at 730. Let me sell a 730, 740 call credit spread. I'll take in $1 of credit. It's going to hold me back $9 a margin, distance between the strikes. And I'll do a little something here down on the bottom side. We'll say maybe 600. All right, same thing, 600, 590. So you'll see I've taken in credit. I know what my risk is. I would not put this trade on in a $10,000 account because it's too much, but you'll notice for $769 of absolute true maximum risk, I've got the potential to make $231. And if Amazon stays between, let's just go ahead and set slices to break even at expiration. Between 597.68 and 732.29, and we'll actually set slices to charts right here. That will tell us. If it stays within that range between now and December 19th, we keep 100% of that profit, or that credit. If it comes down and it challenges or tests one side or the other, well, that's when we make an adjustment and we begin rolling the trade around, either up or down, doesn't matter. We stay delta neutral and we generate positive theta each day, and then we close the trade when we've hit our target profit, or when we've hit our maximum loss. And we do this over and over and over and over again, so that eventually over time your account begins growing. All right, guys, I hope that helps. Please, if that generates questions, let me know. But this is something I want you guys getting comfortable and getting familiar with. This is incredibly powerful when you're searching for trades and you just really kind of don't know what to look for. I want you to stay in heavily traded options, stocks that have very, very tight bid-ask spreads. The ETFs are going to be ideal when you're first starting out, and we want to be trading stocks that are going to benefit from a decrease in this implied volatility, and that's kind of the name of this game. We're selling premium, we're benefiting from changes in premium, and we're staying delta neutral. McDonald's. Let me look at one more here. Sorry, guys. I just, I think this is important so you can see where my mindset is at. All right, so McDonald's, what did it do? We had earnings back here in October, giant gap up. Now it's trading sideways. All right, earnings is passed. We're at 44 IV rank. We have got a implied volatility here of 23.65. A one-day standard deviation move is only plus or minus a 1.68. A weekly standard deviation move is $3.70, and the monthly is $7. So if we decided we wanted to construct a trade using McDonald's as our candidate, well, what do we want to do? We want to go, 42 days. You'll start noticing there's all these weekly choices we can use. 21 days to expiration. We've got, it's not the greatest spread. It's pretty wide, but we've got plenty of open interest. We could say, all right, well, maybe I want to come down here. Do I think we're going to find ourselves back here at the $100 level? Well, maybe not. So let me take advantage of selling a vertical there, and maybe I want to sell a vertical up here. Again, we can make these as small or as large as we want by adjusting the contract amounts and the wing width. So again, this one now, max margins 438, peak credits $62. Terrible risk to reward, big danger if we continue grinding up higher, but this puts the edge in our favor because what are we doing? We're trading in a sideways market that has, I like them when they're above 50, but certainly this wouldn't be the end of the world. And we are taking advantage of time decay. All right, so that's it, guys. We will have a webinar next Monday, and just right around the corner from the new site coming. I know you keep hearing it, but it's really, really, really coming. All right, guys, have a great weekend. Thanks for watching. Bye-bye.